One of the big revelations during GM's earnings report was that there was a pretty significant change in the vision for the Cruise business long term. And the biggest thing that they actually confirmed is that they are not going to be pursuing the Origin vehicle. In fact, they're going to take a $600 million write down to write off what they've designed and developed for that vehicle, at least for now. Now, this isn't really surprising for those of you who have been following Cruise over the past 6 to 9 months. After they were shut down in October 2023 after an accident, we found out that not only was leadership change, but the strategy change for Cruise was going to be pretty significant. In particular, they were going to scale in a smaller number of cities, and they were going to scale with the Chevy Bolt, and that's going to be the new Chevy Bolt. GM gave a little bit more information around that, but there seems to be a lot of confusion about what exactly is going on, why they're not pursuing the Origin. And even Cruise's old CEO, one of the co-founders, Kyle Voigt, voiced his displeasure. And I thought this was a really interesting statement because it kind of gets to the tension that GM probably had with a founder like Voigt. He wants to push forward as fast as possible, despite the fact that you couldn't actually launch the Cruise Origin as it was designed anywhere in the US. But that's what I want to dig into today, is exactly what's going on with that Origin vehicle, because this probably is the future of Cruise, but it isn't quite yet. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. So let's get to exactly what was announced today and the reaction to that news. So these are the kind of headlines that we're getting today. And one of the reasons I've been digging into this is GM announced phenomenal earnings today. It's Tuesday, so they announced them this morning. And yet the stock is down 6%. So it's a little bit strange what the reaction is. And there's really only a couple of things from the earnings report. One is the changes that are happening at Cruise, the $600 million write-off I mentioned for the Origin, and then also changes to their strategy in China, which again, neither of those things seem particularly surprising. China's been very, very competitive, not a lot of margin there for any automaker right now. But this is the reporting that is out there. GM did announce that they were going to at least delay the Origin. They're not going to pursue this in kind of the foreseeable future. So probably over the next couple of years, what they're going to do is they're going to use the Chevy Bolt, and they're going to leverage that platform to try to make the Bolt a little bit more economical. So you're going to have basically a first best customer for the Bolt. And there's a lot of uncertainty around the Origin to begin with. This is the thing that I think we're missing, is that in 2022, GM filed a petition with the National Highway Traffic Safety Administration. So the big regulator, safety regulator, they're the ones that mandate airbags. And they have rules that say that you have to have a steering wheel in a vehicle. There's a lot of other things, but that's really the big thing, is if you don't have a steering wheel, how in the world are you going to move the vehicle if something goes wrong? GM filed a petition to deploy up to 2,500 of these Cruise vehicles annually without human controls such as brake pedals and mirrors. The agency has not reacted. The Teamsters union actually came out against this proposal, but then you're getting reactions like this from Kyle Voigt. He is the former CEO of Cruise, was pushed out after the accident in October, and the company's response to that, it wasn't really the accident itself that was the problem, it was the response to regulators. He said GM repeatedly finds themselves in a 5 to 10 year head start, but then fumbles the ball, shuts things down, and loses the lead. Anyone remember the E? It's like someone keeps letting them look into a crystal ball, and they just go, nah, we're good. So that is a pretty scathing response from the former CEO of Cruise, and someone who would know that the Origin vehicle is not capable to be launched in the US. You can't launch this anywhere in the US right now. So if they're going to spend another few $100 million building out the Cruise and then it gets denied, that's just not going to be a good use of capital. So what they're going to do is they're going to use this Chevy Bolt, and they said that they're going to basically leverage the new Bolt platform. So they have operations right now in Phoenix, Houston, and Dallas. They've moved from June 11th, so they've moved from mapping to now supervised driving in these cities. So starting to move towards commercial operations. And like I said, the plan for Cruise is to then scale these vehicles in these cities, at least a small number of cities, starting with those 3, to build out this ride-sharing network. I don't think it's any coincidence that this looks very similar to Waymo. They are not making a vehicle that doesn't have a steering wheel or brake pedals or mirrors. They're making a vehicle that looks very similar to the Cruise vehicle that is going to be used going forward. So not a huge change for the autonomous driving, the level 4 driving autonomous ride sharing systems that are being built. But if you are an executive at GM and you're trying to figure out what is the future of Cruise, you have to consider these risks. And that's exactly what Mary Barra talked a lot about on the conference call. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. So let's go through exactly what we know about Cruise and what these write-offs look like, what the future might look like. The quarter ended June 30th, 2024. So the second quarter, Cruise indefinitely delayed the Cruise origin and recognized primarily non-cash charges before non-controlling interest of $631 million. So these are non-cash charges, but they are going to impact the bottom line, so net income, but not free cash flow. That's why you saw them increase their free cash flow guidance while their earnings guidance or net income guidance on a non-adjusted basis was not necessarily as strong because you have this non-cash charge. One of the reasons you might do this if your GM is you're having a pretty good year, you might as well write off some of these things that maybe don't have value while you're having a good year instead of during a bad year. But that's not something they stated. That's just something that companies can often do. The other thing that they went into is that they're going to base this technology on the next generation Chevy Bolt EUV, which is expected to result in lower cost per vehicle production and reduced regulatory uncertainty that surrounded the Cruise origin. So you're lowering your unit costs for the Chevy Bolt EUV, and you're taking a huge regulatory risk off the table because they don't have to get approval for the vehicle itself to launch the Bolt as an autonomous vehicle. So again, you're taking the lower risk solution in these early phases of scaling the business. The other thing to keep in mind is that these are write-downs. The design for the Cruise origin doesn't evaporate when they make these write-downs. So it's very possible that GM and Cruise can turn back to the origin or something that looks a lot like the origin sometime in the next few years. So when you prove out the technology, when you prove that there's a commercial business there, when you start attracting riders, then you can move out, then you can move and scale a vehicle that looks very similar to the origin, maybe upgrade some of the technology that's inside. So this is not all lost, but what they're doing is they're reducing risk for the business in two different places. You're making the Chevy Bolt EUV going to be a little bit more economical, and you're reducing that regulatory risk, which I think a lot of investors and a lot of observers, even Kyle Voigt, are just kind of glossing over right now. So that's what's going on with Cruise and with Origin. I don't think this was huge news. It was actually just more clarity about what the strategy looks like going forward. But let me know what you think about Cruise and the future of that business within GM in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.